Okay, welcome guys. Just let me know if you can hear me okay, and we'll get up and racing. Sound okay. I'll just put that up here as well. There. All clear, fantastic. And let me get that. Oh. So you can hear me okay? I had it on mute. I never know what's going on with the sound some days. Oh good, all right. Well, that's good to hear. That's good to hear. Alrighty, let's go. Let me just type one other thing. Sound good. All right. All right. So welcome to Trade Setup. So what you see on the screen now is just the it's our website. So we've been doing a few changes, I've mentioned. It's just updating it, making it look a bit better, a bit more pretty, tied it up a bit. So we've got a video on there. Let us know your thoughts too, by the way, because it's someone put this together. And I think they've done a good job. I mean, I'm an old school boy, so I don't know much about the modern stuff, but I think it's great. I keep tapping my foot to the music, so it gets me going. Anyway, let me know your thoughts if you want, if you have a look at it. And also, I mean, if you scroll down that page, you'll see all your bits and pieces. What we're going to do also, we'll be putting on a newsletter subscription button. So feel free to subscribe to that. If anyone's new and is not, and you're just sort of browsing through, make sure you subscribe to that because it'll be free emails out and no strings attached. And we'll just be emailing that out. And if you don't like what you see, we'll get you off the list. That's fine. Just send us an email. But it's a good idea just to jump on there. And also, that's once we put up there, I'll let you know, or you'll see it pop up if you keep an eye on the website. Also, down below, you'll see us on Facebook and then Twitter. If you just click on those links, it'll take you there. And feel free to subscribe if you haven't already. That'll just help us promote it all and you get the ball rolling. And you'll see the far one, it doesn't look like much, just looks like a cloud, but that'll be the trading view link. So let us know. And also across to the right, we've just put up a resources tab. So there's just bits and pieces that I've been doing on the streams at the moment. But what we'll be doing, there'll be some videos I've got to upload still, put them on there of bits and pieces. So we're going to do the email outs that I was just mentioned before will be the 3 parts, and there's some video, just a 5-minute video on each. One's on stochastics, one's on moving averages, which you may have seen if you're a subscriber to the YouTube channel. See them pop up. We're going to put up another one this week will be on stochastics, and then the third one will be on MACD, and how I sort of piece those together with price action. Most of you probably know anyway how I do, but it's a good little resource that you can refer to that's short and sharp. And then I'll be trying to do bits and pieces on other stuff as well. Price action, and then, stop losses and how you enter a market, just all bits and pieces, which is going to help. So keep an eye on that resource section coming forward or going forward. But if you do subscribe to the newsletter, you'll get a heads up as well. All right, let me get rid of that. So that's not what I wanted. So today, just want to talk about, obviously, everyone saw the market caved in on Friday and then bounced straight back again on basically once Europe opened, it bounced straight back and it started to head higher. So it was interesting, and you knew that we're going to open up stronger today because everyone that sort of sold out and got caught out with that sell-off, especially driven down by China. You can see all the major indices we had during the Asian session. So basically 9 to 5, or 4 o'clock the European session opened, and it was started to find a bit of a base there. And come 5 o'clock when their equity market opened, it basically rallied from there right up until the US opened. And then so when the US opened, the index, their stock indice alone had missed most of that move. The futures didn't. Obviously, the futures were moving around overnight. which was the Asian session. They did bounce back quite hard, and the Hang Seng didn't, um, which is not surprising because they're the ones that sort of started it all. Coke. So that's what I sent out on the ASX. So I was looking at this coming to the close, and unfortunately, I mean, two things. It didn't quite set up for a buy, but the way I was viewing this, it was a gradual. I mean, if you look at this is a 30-minute chart. If you looked at that on a lower time frame, and you looked at the go and look at the Hang Seng and go and look at the Dow, sort of from that period, 10 o'clock open till about 4 o'clock on Friday. It was a controlled sell-off. I mean, the controlled sell-off, if we're all expecting another big move lower, it's not going to be controlled. It's going to be everyone running for the exits at the same time, chasing price down, and it's just going to go. There's going to be it's going to be hard to jump on board to get short, but the volatility is going to be there, and those moves are going to be, I think, quite savage. Now, that wasn't what was happening. So if anyone thought that what was going on Friday with China, and I don't know what their new laws about Hong Kong, obviously, we all know China's not going to give up on Hong Kong easily without a fight, at least. I mean, they're not going to, they just don't want to. It's a major hub for them. So they're obviously going to continue pressuring Hong Kong and try to do it politically, or whatever they're going to do. So that what it's done though is obviously there's more argy-bargy between the US and China now, and that the Hang Seng started. Obviously, they saw that as a negative, and that we basically got led down by the Hang Seng. And once you get US overnight futures starting to sell off, I mean, they've got nothing else to follow. They have to follow that. They're not going to follow Australia. They're going to follow what's happening in China, and obviously what we see happening with China and the US, and let it lower. The funny thing is, it just bounced, and because it was so controlled, I was watching this level, and you could see that the momentum was starting to, run out of steam here. And generally, I'm looking at that, and that goes back to the videos. Keep an eye on. I'll explain more about the way I'm using MACD for momentum into sort of those oversold levels. What we always talk about: the strength of buyers, the strength of sellers, using the stochastics. And you can see that it's come down. For it to continue lower, you would have thought most of the energy on the downside's been used up. And the way it was controlled, it was just every pop was sold into. So it wasn't anything that got out of hand. I just feel it was a bit of a squeeze of buyers, any buyers that have been sort of buying in here, looking for that pop. And you can see it all measured out quite nicely from that, roughly not the high, but this high, that was a bit of a washout. So if you take from high to that low, bit of a contraction back up, and from that high, you extend it out, that took you back into support. So once you started flushing that support and bouncing again, that in my book was a bit of a long. It's just it was hard to get onto, because you can see from the half an hour chart, there was really not much to buy into, apart from this little. If you broke that down, if we look at a 5-minute chart, see if we can get onto. That was sort of the only pullback, which in essence, in hindsight, it worked. Buying on the high there, I just don't like the way it ramps up into those highs, because a lot of the times it could do that, stop and roll over and have a deeper correction. So it's a tougher one. That was a tougher one. You got this consolidation. That was probably a little better entry to get into, because by then it started to show signs were there that Europe's bouncing back. Signs were there that the US is bouncing back, and we're going to go with them through the European session and see what happens, because there would have been a lot of shorts built up here to get squeezed back out. So it was a good setup for the open of European session when the markets gapped down and then made it all back again. So yeah, that leads me to sort of that next thing. I mean, the way it got held up here. Go back to an hourly chart. So it takes time to tick over. I think my computer's running out of steam. The way it's sort of holding up above this 54.86 zone is good. I mean, it's just staggering around 55.82, but it is up 80 points or so at the moment on the ASX. It's probably, and we've got a long weekend, don't forget the US is closed tonight, so we haven't got much to go off, and we're not going to really preempt a massive rally in the US, and then we are up at 120, and all of a sudden, the US open and get slammed, and we get dragged down with it after a couple of days rally. So people, you would expect to be a bit tentative, but if we go, once we look at the US, I'm sort of, in my head, even though I'm bearish, I'm looking for a pop. And if we mark this out on, I want to do it on the ASX too, and I know I've got this somewhere. XJ, and look at gold. Gold's just rolling over as well. So that's not the world's best sign. If you get the currencies are going up, I think having a bit of a bounce, which suggests the US dollar's going down. The US dollar gets bought up into safe haven. If they're getting sold off now, it's not much of a safe haven. We're not viewing in that through the Asian session. Probably going to Europe, but we'll see. Actually, I just want to see where they are. Yeah, that grind lower. This is the pound, by the way. That grind lower, we were looking for a buy in here. It didn't play out. It took out or tagged the stop level, which was basically if you don't enter and it triggers the stop level, that's just a level to get out of or cancel the alert. So don't, if you ever get alerts from me you're sending out and it goes through the stop level before you enter, you've got to make sure to cancel it, because there's a reason why I would put it at that level, because I think I'm proven wrong. And I'd rather sit on the sidelines and reassess it. So at this stage, I'm still reassessing what's happening. That grind low, and don't forget this is a key support zone around here from the bid to the offer. If this holds up, I don't see that's going to have a lot of emphasis in the fact that we've just broken with this little pop up here. We've broken this downtrend. After a big flush of that zone, we popped back up, broken that downtrend, and we're sort of grinding lower. This could easily pop up, especially if the US dollar gets sold off again. Retail sales I'm probably looking forward to. That was on Friday night, which are really bad. A little bit worse than expected in the UK, so they're largely factored in. Now, if they come out of obviously lockdown, you would expect that to start picking up. So probably that's the worst of it for retail. So they could be looking forward. If they start to factor in better numbers, you would expect that to lift. So really just looking for that pop, pull back to buy into a higher low. But yeah, that Aussie, we're looking for a sell, and here we did sell it. It didn't go anywhere. It would have been up now, but so be it. It actually looks more like, look, it could pop. It's a bit of a grind lower, and then we could ramp up again. Again, we just have to wait and see what's going on there. So actually, that's what I wanted, the XJO. So let's get on to the indices. Does anyone keep an eye on the indices and what's going on? I will. What am I doing? I am looking for the XJO. Here we go. All right, so this is what I just had to mark. I mean, I don't use Fibonacci's, but I know people do, and I know that sort of those levels can mean something. I don't know how people trade off them. I don't believe that are you going to put in a sell? I mean, people say I'm a Fibonacci trader, I don't know how you can trade off a level that's got nothing around it. I mean, a 50% retracement, there's no one's under any pressure. As soon as it hits on that 50 mark, how do you trade off that? Do you go long? Do you go short? Is there any levels that you're not working off a particular level? Levels to me, and this is where I find there's a bit of a downfall. It's all great, and it's great in hindsight when you can say, oh, look at this one. It bounced off that 38.2 fib or whatever it was. We bounced off. So Fibonacci's great. It bounced off again. It doesn't really mean anything, because that's actually, to me, that's where a level is here. There's a level owned here. So it's more that was there. To me, a level is made when people are going to be put under pressure. So if you've got a resistance zone, you expect that it's a resistance zone, because if it goes through, it's going to trigger some stops, or you're going to get some sort of action off that level, as in sellers starting to step in force and protecting that level. It's not going to be a level that's like this 50 that's going to be in thin air, is what I would call it. There's no, if it gets to 50, what sort of reasoning? There's a level further up, 59.60, which you could find, but I mean, again, we don't know until it gets there. We don't know if it reacts there. It could react off 50, and Fibonacci, you go, look, it was great, it worked off 50, but how do you trade it? Do you trade off a lower high? How do you trade it? And that's always been my sort of reasoning behind it. But in saying all that, I will keep an eye on it just randomly, more for curiosity's sake, if I can say that word, than anything else. And to me, that's why I've just keep an eye on it now, because I know that we could pop up. I mean, it's a good reason to. We've just got through this Fibonacci level of 38.2. It seems to be consolidating, if you can see. Consolidating here. We've had this ramp up, and we're getting these higher lows, higher lows, higher lows. Potentially this is a higher low, and we're just seem to be consolidating here. Now, if we do ramp up, this is going to go into what's happening with the US, or show you in a minute. We could easily get to that 50% level of this move down, retrace 50% of that move, and then roll over, or we could go deeper and get to that 61, because I just know that those sort of levels, there'd be interest. whether they just jump in right at the level or roundabouts, a few points above, a few points below. But it's going to be sort of that level where it could see some action. And I'm bearing that in mind that these sorts of things can happen, and I'm sort of looking for that pop up. Because on the downside, it doesn't look like there's any pressure on the downside still. And if we go over to the US now, look at the S&P. We've had this sort of grind up. I know this is not a double top. I mean, we discussed this before. So if we got an anchor level down here at 27.31, it pops up, it pulls back, it goes again, and it fails off that level. I think you'd be careful not to call that a double top. Just because it's touched that level and touched it again and failed, because realistically, if we draw this in, this to me is the move you're looking at. Okay, flush out there, you got up here. So this is the anchor to the level down. It's retested and had a deeper correction. I don't particularly call that, I mean, you could probably, look, maybe you could call that the anchor to the uptrend. It's just flushed it out, but either way, it hasn't really flushed it with conviction. So there could be that's your anchor level. That was a big washout, and we go again. But if you're just moving back and you say, well, if we get through that level significantly, then your anchor level's here. If you retrace it, that could stay enforced. We could have a deeper pullback just to flush out some of these buys before we reset and go again. So it looks like we're in that phase of resetting and go again. What chart? I can only see pound chart. Really? Are you on YouTube? Yeah, you're on YouTube, aren't you? So is it coming through okay, guys? I can see I'm on a chart on the SPX. Has everyone else seen that? The S&P? Pretty sure it's coming through okay, but just let me know, Nathan, if you haven't. Yeah, so it could be just, you might have to just come in and out again, Nathan. Sorry about that, mate. Yeah, so for me, get rid of that. I consider it cool. No worries. All right, so that's the way I'm viewing that. I'm viewing that, say, if that is your anchor to the uptrend, that's a flush. So that anchor, if this is your anchor, that's in force now. But I think coming into that, this level was key for me. And I thought, well, if we go down too much and we start flushing that level out and you hold a lower high, yeah, we could get a bit of a sell-off. At least you can hear me, mate. At least you can hear me. So what you've got to notice now is that, see that, and this is how I would go about interpreting the MACD and D more for what's going on here. So I'm having beeping. Can you all hear me okay still? Am I coming through? Yep, should be coming through. All good, all good. So that level there, that pop up there, and then consolidating around the highs, for me is key. Because if you consolidate at a higher level, you could be, I mean, this is going to flush people in because there's going to be some bears in there. Yep, there's going to be some bears in there looking to sell off because we're up near that resistance. Yeah, there's people that just are generically bearish, and there's people that are generically bullish. They just can't help themselves. But like I've always said, if you can sit rather than pick on the fence, just wait 1 second. I'll just put you on mute for a tick. Give me that, Liv. Give me that, Liv. Sorry, mate. Sorry, Liv. Yeah, I know what it was. My little girl's on the phone and it's hooked up to the earphones as well through Bluetooth. I can hear her pressing buttons, and I think it's stopping either you guys hearing me flying through or not, but I can hear that through my headset. But anyway, so where were we? So we've got it's push up, pull back, push up, flush at the level. So either way, that level's still in force to me. It's just washed it out. There's going to be cleaning out some sellers below that and then bouncing back. So if you're bouncing back that strong, If this was going to be a clean out and then you're going to build a lower high, we shouldn't have been all the way back up to this resistance zone. And to me, that's a key that we've actually gapped up here and we're consolidating those highs. So look at the stochastics too. If you've got stochastics from buying strength when it goes from oversold to overbought, and selling strength when it goes from overbought down to oversold. So if that selling strength's coming in, which is what I'm gauging by using the stochastics, selling strength's coming in, it's coming in, but price is soaking it up. Okay, price is not going anywhere. If there was, so you got to remember, if there's 100 people on the bid and there's people selling into them, if there's more than 100 are going to sell, then they've got to take out the bid and they're going to go to the next level down, the next level down. So if the more sellers there are and the buyers don't change on the bid, they've got to go down a level if they want out. So they keep going down, pushing it down, pushing it down. Okay, so if you're not getting that, it's kind of like the reverse. People want to sell up here, but there's more than enough volume on the bid or around about, say, a couple of levels low that it's going to soak it up easy. Or someone pushes it down, someone bangs straight in from the sidelines, comes straight back in to buy it up again and hold it. So there's more than enough liquidity or buy in buyers that are happy to buy it and hold it at that level. So they're comfortable with price hovering at that level. So what you're seeing is the selling pressures coming in, but buyers are holding it. And the same with the MACD. This is kind of an easing in momentum to the upside, which is fine. But if you ease in momentum and you don't roll over, it's something you've got to take into account that, and you've got to recognize that, okay, we're consolidating this high. Not saying it won't roll over. I'm just saying that the odds are when you start, if there's a bit of a sell-off, it shouldn't take this long. We shouldn't spend more time up here while the selling pressure coming in and it's getting soaked up. It's not right, if that makes sense. And the same happened up here. So anytime you sort of get those swing highs and the seller's going to outnumber buyers, it's going to go down. Here, sellers outnumbers buyers, it goes down from oversold to overbought. Momentum comes off. Same sort of here. Momentum comes off. You got the momentum coming off, going from overbought to oversold. And we've got a big shift in price, back down to support. Here, we're not getting anything. So that's just a different dynamic through here as we're spending the time. Sellers coming in, price doesn't go anywhere. To me, that once they take the foot off the gas, what's going to happen? If you're going to get sellers, all these sellers are loaded up, they have to now turn around and buy back into the market. When you know that there's not that many sellers there, it could easily spike that higher. So that's why, and that's the S&P and that's the Dow. Same sort of thing. You can see that rollover, selling pressure coming in, momentum rolling over, easing off, but price is not going with it. And price to me is not suggesting there's weakness. It's suggesting it's consolidating those highs, ready for another pop, and it's going to catch anyone that's been selling it off this, off this resistance, because it's a clear resistance, previous high, got through this level, big sell-off here. That would have scared a few people. We pop back up. There's still some bearish, sentiment out there. It's going to sucker them in and then turn around and squeeze them out. Okay, so that's what I've got in mind for those, mainly the US. And if you go to the DAX, it's spending some time up here too. If you drill it out a bit, spending some time up near those previous highs. And momentum's easing off. So momentum is not really down, but momentum up is easing off. So it's got to have a bit of a pullback. And if the pullback is a sideways pullback rather than coming a real pullback, if that makes sense, I think I'll spit it out sooner or later. If that doesn't pull back and it's consolidating sideways, you expect a leg up. And that's just natural from seeing that sort of price action. Okay, so that's, and probably the FTSE is a bit similar. They had a decent sell-off and they bounced back Friday night as well. So that's not looking too bad. Again, we've got this consolidation here. I don't mind when you see this kind of action and you've washed out this low. This could just be another wash out of the previous low, and then we go march high. We consolidate here and go up, a lot like we did in at this zone. So there's a lot of, if we do that sort of thing here, and then we have another leg up, take out these highs, and we go straight through this high at 61.40, say 61.50. Okay, so there's a few things to me adding up across the board where we could see highs. And that might be that last push because we've been consolidating here. Bears are coming in, they're getting flushed out. If they get flushed out on the upside and they start chasing their tail up, that could be sort of to me, it could be the last ditched effort on the upside, and then fundamentals they can start to flow through. Because realistically, the fundamentals are not good at all. Global fundamentals, numbers coming out are bad. We must be completely writing it off. Everyone's leaning on the back of stimulus. But what happens if corporations start to dwindle? They're in lockdown for too long. They can't get back. The debt levels are way too high. All these sorts of things start filtering through. We come out of lockdown. Coronavirus number of cases go up. people are going to get bearish again, I would expect. So that's sort of a longer term view. I just think in the meantime, we could have a bit of a pop just to flush out a few more people. Okay, so just bear that in mind. That's what I'm sort of looking at this stage. Don't know what everyone else's views are, but yeah, I'll be looking for maybe a pop there. Look at the Hang Seng. What's the Hang Seng doing at the moment? Hang Seng, I haven't got that up on the CFD prices. Let me just see where we're at. Yeah, look, it's opened a bit lower, but it's hovering there. So it's opened down here, and it's just hovering around this zone on the Hang Seng. I'm on the 30 an hourly chart. Let's go to 30. Yeah, it's just sort of hovering around this support zone. So it'd be interesting to see. I think the markets I would expect would be a little bit quieter this afternoon. Maybe in our market we get a bit of profit taking come in because the US will be closed. People may not want to hold overnight, any long positions because it's too much time for some negative news to come through. And I think they're using the negative news to flush out a few people and bounce back again. It's flushing out some. You get some sellers in, flushing out a few buyers, and then turn around, squeezing them back out again. Okay. All right. So, any questions there, guys? I seem to have ranted on long enough. So we just backed off a bit, running up 73 at this stage. So for now, we don't have many positions. We've only got 2 positions on. Anyone that did notice, and I think the alert, it seems the alert didn't go out for whatever reason. I think I had a bit of problems at the end of the week on my computer, and it might have been the same time where I went to send out the alert on MMS. We were stopped at about 7.15, and the market got to 13, and now it's back up probably at 50 again now. 24, so it has got higher than that. But I got 63 today, so that's awesome. Yeah, so that's choppy, that stock. It's, wrong pick. Close it down and move on. Yeah, 20 and 50 EMAs, Jason. EOS, we'll have a look at that. Yep. So start putting in some stocks you can have a look at, even if you've got some indices. We plugged through the indices a bit. I'm trying to do more on indexes, probably on the 30-minute charts, but it's hard to get some that are not, can set up during the day. But we'll keep an eye on that. We've got some currencies we've got an eye on. The yen, looking at potentially the pound, which we mentioned, the Aussie. The Aussie is going to go with the indices. So even if the US dollar doesn't bounce and you get, say, the euro bouncing, so the US dollar is gradually edging lower, but if the share markets are edging lower, I would suggest the Aussie is probably just going to go with the share markets more than anything else. It seems to be going lockstep with the fortunes of the indices in the stock markets. So if you're going to trade, a bit of a proxy for the Dow, and that you could trade the Aussie, I guess. So we got EOS as the first one. Anyone else chuck it into the chat, and we'll get through. So there's another one. I'll just go through a couple. We'll start off with getting moved today. Bad news. What are they doing? Whoa. One thing, Pete, I could suggest. When did you buy into it? Last week. Do you know? Are you going to know when? Do you know? Can you tell us when you bought into it? I just want to mark this up. I think it's something to be said about this one. Oh, here we go. So you got, let's take that off. It's a bit thick, isn't it? All right, so you've got your high up here. All right, the market's popped up through the high and then got smacked, but that was coming down before March. March was a big sell-off, am I right? When did it start kicking off? It was coming into Feb. What day is that? 24th of Feb. So, 21st. So yeah, it's probably at the same time as the ASX started tipping over, May 18th. Okay. So there's one thing here. I mean, that was probably you're buying into a stretch market, in my opinion. The good thing is, you got this flush lower, that rejection lower on volume is pretty good. And everything really at this stage was lining up a bit more. You've got stochastics come off, big flush and rejection. So when you get that rejection on some good volume, that's a good sign, and it's just through that low as well. So that would have triggered a few stops, and it's bounced and finished back above that level. So that's one thing to take note of, is this sort of, hopefully it holds up there. That's, like I said, one thing to take note of when you get this kind of action, and the market can't, if that's negative, it really should have finished below, because you should basically, it doesn't finish below because someone's willing to buy it up hard against the flow. And if they're willing to buy it up hard, there's a reason, and there could be more volume. You don't know how much volume is behind them. Whoever's buying it, is to come, okay, in support. So if you ever see something like that, it's a good sign. If there's no one willing to support it, it's not going to finish back above. It's really hard, because once the market starts going in a bit of a sell mode, and it starts to flush down through another level, or a key level, not really well, it is a key level there, about 670, 665. And flush down below, you got to remember, if it's not going to bounce because no one's willing to buy it. It's as simple as that. And if it finishes below there, that's not a good sign for the following day or the following few days. So the fact that it's finished above there was a good sign. Okay, so I can see what's happened. You've got a bit of a buy if you're looking in here off this minor high low. Okay, you bought it here, but it's gone nowhere since. So this action through here is pretty horrible. You got low volume. It's not really going anywhere. It did start to pop up, but by the time you hit it on, I think it was that day there, there's no volume really going anywhere. Market's gone to it's been pressured up by buyers, but it hasn't really gone through that high. And you can see we've got a zone of sellers. Draw that here, through here. Okay, touched it here, through here again. Here it's rejected. Just below that, it's popped through and it's come down pretty quick. So once it's come down, it's probably a bit of a, whether you believe it or not, people know what's coming. It's against the law. ASIC rules and regulations. You can't know. You can't have a bit of a heads up. It's insider trading, really. But the fact is, it does happen, and it's hard to regulate. It's hard to stop. But either way, the fact that it's come up there makes sense now. They had a crappy report today. They flushed it up through the highs, and maybe on low volume, because there's no volume going through the highs. Everyone's got a bit excited, going, okay, that's going to continue higher. And the market stretched, so it doesn't add up for me for a buy. But then it's turned around and come selling off. So what they're trying to do by doing that is get people excited. People start jumping on the bid, and the bid starts stacking up a bit, and bang, they're selling into it. So it just means that if they need to sell, they've got support, weight of numbers there on the bid side they can sell into without changing the price too much, if that makes sense. So, this is all, I don't know if that happened or not, but it happens all too often. You get this strange sort of price action, and then news comes out. And it happens all the time in these low float ones. There's the smaller stocks. You'll get them doing nothing and then pop. They'll pop hard, and then lo and behold, they're going to trade halt and they're doing a capital raising. So all they're trying to do is get price up above, so they got price above the 15-day VWAP. So then they can come and say, okay, we're giving you the price of 15-day VWAP, which is 30% below current market. How good a buying opportunity is this? You can go and, you're already up straight off the bat, but as soon as they come out of the trading halt, bang, they get sold into again. So this sort of thing happens day in and day out in the markets, and ASX seem to be spending more time focused on other things, and ASIC do, than what, market manipulation, these sorts of stuff. So it's interesting. I don't want to be accusing anyone, but there's a lot they should be looking into, I think. But either way, we've got that there starting to roll over, and it's come straight back down to the support zone. So if it can't hold up on support through, say, 660, 670, it really should be, if there's going to be weakness, if it's going to play out through that level, there's going to be a problem. It could be all the way back down to testing 525, but it is a level which is held before. We've held it here, we've flushed it here, and held above. It's back down there now, so it really needs to hold that level. It could easily flush down and finish above like we did here, but I'm not sure what the news is, but it's not looking that great. Probably buying just on that break above there, your stop should have been, it could have been 725, for instance. Did it gap? No, it's opened and just gone smacking straight down, hasn't it? So whether you've got any chance to get out of that, I'm not sure. Where is, did it come out? What's the news? What was the news there, Pete? When did it come out? 22nd of May. Okay. Divs. Was it divs, was it? I don't know. I'm not sure. I'll have to look into it. Yeah, that price action is not too crash hot. And it's got through that level. So that pushing through, especially even on Friday, that wasn't a bad day Friday considering. Bit of a strange one when the market's selling off. It's actually opened lower and rallied into the close on when the ASX was getting sold into. So yeah, strange action anyway. So we'll see what happens there. What was the other one? EOS. There we go. We got. Let's get rid of that. So EOS 512. It's decent enough. It's done some volumes. It's doing some volume here, isn't it? This is one of those ones that's been, it got poleaxed, obviously. It got smacked down from, what, $10 to 3. I don't even know what kind of a drop that is percentage-wise. 70%, was it? Crucified. It's bounced back quite strong with that bounce, but what's happened now, it's starting to find some buyers lift it. So it's more like accumulation. And that's what you want to see. You don't want to see these sort of V-shaped recoveries because, one, they're not going to be supported by a lot of volume. You would expect that sort of recovery, and people have got to chase it higher. No one really wants to chase it higher when they think the ASX is going to roll over. So it's had a bit of a pullback, started to be supported at 4, touched down at 4 again. So you might have some more. And what they're doing too, it creates, when you get this move up and it comes back down again, it creates anyone that didn't get out concern for them because they might be looking at that. And if there's obviously more talk about the ASX getting sold off and the Dow falling over, all these sorts of things, it's going to create that concern and potential. They're going to just look at it, go, look, I want out because this thing could go back down to 3, could go, you don't know where it's going to go. It's just that fear. All right? But then it starts getting soaked up and you can see that selling pressure sooner or later is going to come out and markets can start to lift. So you need to see this price hold above the 20 and start to consolidate at this above 5, say above 5, and then there could be a move up through 550, which I would expect you might find a bit of resistance at 6, but then I would expect that that's going to be a second leg to get up higher than that. And if we take, I'm going to draw this up, and they basically from low to high, so from low at 3 up to 6, that's $3. Measure that out from 4 would take you to about 7. So there is the potential for consolidate here, even above the 50, and then start to run again. Say your entries through this high. At, what's that? 5. Say it bought it at 550 with risk as long as it doesn't go any below 5. Risk it around 5. Looking for a run to 7. Okay, so what's that? 3 to 1 potentially. Okay, and that's your first leg up. We've pulled back, we consolidate. So generally, you get that pattern. Market moves down, you get a bounce, the first pullback. If that starts to get consolidated, you're looking for the second pullback of that down move. Okay, if further weakness doesn't come in, because anyone that's potentially sold it here or looking for a bargain thinks this is a bargain down at these levels, they're going to start to see it at this level. It's not going any lower. Okay, I want in here or here or here. They're going to start to chase it up. And anyone that's been sold it is going to have to bail quite quickly. All right. That's if you can short it. I don't know if you can, but I'm assuming you can. So yeah, generally you're looking for that secondary move it up. And then you're going to have to reassess whether it's got a bit extended up here and it's going to have another roll to retest these lows and then get supported longer term and then go. I mean, that's all story for another day, but that's what we'll be looking for, that fact that we could be looking at a secondary leg up, and that's your base to work off for, and you're looking for your entry. Okay, so yeah, I actually don't mind that at this stage. From a technical point of view, I don't know what they're looking like on a fundamentals. Anything else you want to chuck in there, guys? Just having some cold coffee here. All right, so I was going to show you also MVP. Oh, I don't want to look at that, Andrew. I hate the stock now. So I really hate it. Um, MVP. I don't. I say that because I had it for ages. Took about 5 cents out. So I had it from 5.25 average, say somewhere around here. So I bought some and I bought some more. I bought some more on a spike. No, I didn't. I had it. Maybe it was. No, I had it. I'm sure it was 5.45. But anyway, um, price pushed up, pullback. It was looking great, and I had it all through this, and then bang. No. Sorry, I take that back. It might have been six something. I had it from 6.25. It might have been an average of 6.25 because that there is cracking price action. If you can see that. So I think I bought some and I was buying and averaged in around 6.25. I think it was 6.50. Was in here. I'm not even the right stock. What am I talking about? What happened there? That's better. It was 5.25. Here we go. Where are we? It was in here. And then I got stopped out. I took it out at around 5.50, all the way down here. So I saw all this got belted. Am I looking at the right stock? I am, and I'm looking at the. No. All right, let me start again. Are you in this, Andrew? Have you got this stock? I reckon it's good. I mean, they're doing well with their product. What's the product called? Penthrox. They're doing really well. I had it way back here, so I had this for quite a few years. I bought it before that. I was buying it. God, when was I buying it? I must have been buying it in here. You go. So that looks a bit like EOS. I was buying it back here in 2015 and 16. I had this run up. I think this is where I got flushed out with that move down. There's something to do with directors selling. Um, I'm pretty sure. So I rode it up to about 8 from 5.25. That was looking great, and I didn't get out until we got this. See this sell off here? You can see this sell off here. I didn't expect that a lower high come in, so I just bailed. I took out say 10, 20 cents after seeing all that, and then I did not get in. This would have been an entry to get in. Even you can see, not so much in this flush, but here that would have been prime. And I just, for some reason, I just didn't do it. I didn't get back in, and you saw this run back up all the way to 10, 11 bucks. So that to me, yeah, that's what I don't like looking at. But then obviously you got smacked down to $4 during this big sell off, and then we bounced back up. I have got my eye on this now because you can see it's consolidating above the MA, so that's a good sign. And longer term, lots of approval. It's just the US, I think, is the big thing, and that's why I bought it. It was pending something with the US, and then as soon as they didn't, I think the US they had to do something, and they were talking about years. So the reason was I was buying it was because they were pending an approval by the US that's going to get through the FDA, and that then it got pushed out a few years. And yeah, all right, that's triggered that a bit of bad. In the meantime, they were signing up more and more countries for Penthrox, and the UK and Europe and a lot of countries. Then once it come out, the big market, obviously in the US, was getting pushed back. I think 3 or 4 years because they had to go through the rigmarole doing something else and more testing that they FDA wanted. That put a bit of a dampener onto it, and then you come out with this here with the management was starting to sell down or got out. Something happened, and that just really killed it. And obviously, everyone's looking at it, not going to get FDA approval, and then forget about it. They're selling down. We're out, and it got sold down. But then later on, obviously, they kept plugging away, did more things, and it was looking really good. So I think longer term, I like this stock. It's hard to trade because you can see the spread was about 6 to 10 cents. I think this morning when I was looking at it, and it's thin. 438 shares. So what's 1,000 shares? Not even 8 grand, is it? 8 grand on the offer. It's well less than that. It's about 5 grand, 4 grand on the offer, a bit less. And then you come down, upper level for 810. There's even less, just under 2 grand probably. So it's really thin. Even though they've pumped out 1.5 mil, it's not heavily traded. So it's a hard one to trade. And you're going to get these big swings, these big movements, sort of that volatility. But if you want a big position, you have to start to build it bit by bit by bit. which is a good thing for support of the stock if someone's trying to build a position. But then you might, and it's good if you can get in and they chase it higher, because if it starts to get a bit of a kick on good news, there's not much stock in the way. And someone's going to have to chase it up, and generally retail will do that. They'll chase it. But either way, I like that, big flush out there. If you're lucky enough to start building it into here, which I didn't do, around 5 or so would have been great. You saw that spike up, but either way, I think it's looking positive. The fact that it spiked up, come back, and it settled back right on the MAs. The MAs are still going up. Sitting on the MAs here, on the MAs, so it's getting soaked up, okay? And the fact that we could be, after today, if we start to, again, we're holding off the MAs now, and this is sort of the first good run up, took out these previous couple of highs, and we're starting to look just below the $9 level. It did back off just below 9, but it's getting soaked up at the MAs. So again, that could be, someone that's building a position doesn't want to get on too much, so they build a bit, gets up to it, they start knocking it down again just to create that negativity that comes back down, and they start to soak it up. So you get people selling it into their bids, they might soak it up a bit, and then don't let it get on too hard. So they're just trying to cap it from kicking on until they're ready. All right, so we'll see what happens with that, but I do like that stock. But if you're long this somewhere, around this zone, I'm expecting higher prices than that. I would expect it to get up through 9, that high there, take out this high and start to charge to 11. I'm not sure where they are at with FTA anyway, so if that kicks off, God, this thing's going to fly, I reckon. All right, CDA. Again, I don't know anything about this. Big sell-off, and that's flushed out a lot of this. So a lot of this move up, you can see it's right back to, it was trading at this level somewhere around, what's that, 2019. So it was only about, it's taken out about a year's worth of buying in about 2 weeks. All right, so that flush down, big flush down, has had a good bounce. And my biggest problem with this, again, I know nothing about the fundamentals here. The way it's bounced back quite hard, it's getting capped at 715. You can see those offers loaded at 715. They're probably trying to hold it from getting through that high at 725. But either way, it is now bouncing off the MAs. You can see I don't like this action. The fact that it's bounced up quite hard means that it's a good stock. People like it, like to trade it. It consolidated through here between about 550 and 6 and started to lift again. Had a bit of a pullback, and this is sort of that first pullback really to the MAs. Once the MAs are crossed up, the 20 is above the 50. I like that sort of sign. You like to be the 20 above the 50, but I'd rather be it from a lower level. Everything else is looking good. Stochastic's starting to roll up, so you've had selling pressure coming in. Last time it was oversold down here or around that 40%, the same sort of level. It was down at 550, so it's getting held up at a higher level, which is just definition of an uptrend. Okay, so it's trending up. If you're in sort of somewhere in here, great. You've got your risk just below. If you can get through 725, then you're targeting up towards about 8 from here. So what's that, a good 10%, 15% move from here if you can do that? And you know where your risk is. Your risk has got to be below this sort of, you can have it at probably, say around 625, for instance. So if you're anticipating that break there, that trend up is good. And if that matches up, that would match up quite well if the ASX kick off the Dow and the S&P, say over the coming few days, week, then you would expect that to tick up to $8 and get back up there. And anyone that got stopped out of, say you were holding here and you got stopped out somewhere at a loss, but you really loved the stock, you fell in love with it, you're going to be chasing that back up, aren't you? TRS, it's in an uptrend. There's not much to say about it, I guess. It's going well. Reject shop. I wouldn't buy this up here. It went on daily only because of that bounce, but look at the weekly. Yeah, it's found some buys. I mean, that weekly looks better than the daily. I would prefer it to come off this level. It's probably today, if it finishes back down again a bit, sort of back down around this high. What's that? 480. Down 5 cents or low, around that zone. I would expect to have a bit of a pullback. So I think that's, it goes hard, had a big sell-off here. It's gone back up again, back through this high. I can't buy something when it's gone like that hard, especially, looking at that. when it's just got through this resistance zone here. I mean, if it goes, I wouldn't buy it now. If it's going to come back and have a little pullback for a few days like this, or even like this, then okay, so be it, because that way you know where your risk is going to be. Okay, but I've just got to bear in mind that it's not the unknown anymore, where people can look at it, go, we may go up, we may not, and you're putting your risk in an area where it's hard to buy, but the payoffs are good. Here, it's easy to buy because the outcome's known at the moment. I mean, we know that the market's going up. Everyone knows, so you're either positioned or you're not interested. So it's when the outcome's known, it's like you got to ask yourself how many people are on the sidelines willing to come in to keep pushing it higher. So that's my concern when it's been going up quite hard and it's bounced off quite strong from that zone. It's just got through a high there. It could drag in, the fact that it's getting up through this high, could drag in a few people willing to buy it, but it's got to hold above there today. If it can hold above there and kick on and then have a pullback, get something like this, then and then start to lift, then yeah, you can go in knowing where your risk is. But just be wary that you don't have wide risk on it because it is stretched at this stage. Okay, I mean, that looks well and truly stretched for me. It spent, what, about a year and a half here before it took off. And then that gave up pretty quickly through the pullback. It was probably coming, no, it got smacked through the pullback, consolidated at a slightly higher level than, say, 240, then started to lift again. So it's kicked on pretty hard. Not massive volume. It's too impressive, but it's better than what it was most of through here anyway. So it'd be interesting, but I mean, that weekly, I don't know if anything's changed there. The volume is a little bit thicker through here than it was. This is sort of selling volume, soaking up here a bit as well. But generally, the average, you can see the average is a little bit higher than it has been most of the time through this zone. So on the weekly, it's looking a little bit better, but even that is still showing that that's a big move up to sort of around that 5 mark, 485. I would rather see a pullback, stick it at $4, look to hold at $4. Pull back here, just clean out a few of these late buys. If we can pull back to 4 and start to hold, then that could be a really good buy. That's what I'd be looking at anyway, Jason. If you're in from lower, great, ride it up. Ride it up and see where it can go. But to be a new entry up here, I'd kind of, if you got in somewhere around 340, that was a cracker. That's a good, pull back here, consolidate a higher level above this, above 2, consolidate good. First pullback the MAs at around 340, you're in. Your risk below, all of a sudden you've got your risk at around 420 now. So if you're entering at 360, you've got a win-win scenario, and just watch to see where it goes from here. As a new buy, I would find it tough here, only because when I take them stuff, they don't give me much money. Good old reject shop. NWH, let's look at that then. Yeah, nice. NWH is still worth buying. Yeah. Did anyone, by the way, we had an alert on this. Anyone knows it was at 175 to buy just before that spike up and their dividend announcement, which really triggered some happy little Vegemites. So I took off the alert. It was just before the entry was triggered, just before the open, and it did match at 190, I think, and then took off after that. So if you held it for the full day anyway, and you gave up the gap up on the open from 175, where we wanted to get into 190, you were still up 20% for that day. On TradeWatch alert at 161. Oh, nice. So you bought it on the open, which is great. I mean, I just don't like the risk with those things. I mean, the fact that it was a dividend play, it was probably the good thing that kept it running all day. Everyone buying it up for the divs, and it looked good anyway off this high low. But actually, I'll just show you something. Just eyeballing this to see what looks like. I wouldn't buy it now. I mean, it's up to you. I don't buy things for dividends, and looking at that, I wouldn't buy that on technicals anyway. If I'm looking at that, support's coming here. I don't know if that's about right. So 1 to 2, 140 to 240. So that's roughly got to projected from that low to high with that move up, and it's rejected off there as well. So whether What you want to do, see now, you want to see a flush down. You want to see anyone there would have been a whole lot of buyers through there. You want to see them squeezed out, or are they going to be committed to hold it? So that's the question now. You haven't got enough information just by looking at that daily chart, I don't think. I mean, if you can hover around $2, you might need a bit of a flush lower to 190. But if it starts to flush, you might need to close this gap at around 170. You might need that, which would match up to a sort of retest of the MAs and then bounce. Then it could be worth looking at for a buy. There's no reason to say that that can't just, we've had that big flush up, we turn around and head south again because of this kind of move. All right, so there's not really going to provide any resistance in the short term, but does that make sense? So I'm saying I would find it hard to buy them because where's my risk going to be on the daily chart? I don't put risk below candles. I would put it below a high low. So as you're rallying here, when we're looking at 175, my risk was just below this high low, meaning that I have to be wrong and a lot of other people have to be wrong. You get into it on a rising market because the market was going pretty much like that. I was looking at just above that high, which it didn't quite get there on that day. Off a higher low, you got that double retest of 140. So for me, that's a prime setup. If you're looking at something like that, pops up, that sort of thing, retest. You want to see that high low come in, and you're going to buy it with you. Sorry, that's not even what happened, was it? It's like that. Pull back, lower high pressures it in. If that's the play there, that's your high low. You're trying to see that action, and you're trying to buy off a higher low, and that's pretty much what you got with this move up here. Okay, and I was just buying through the break there, 175, which it didn't reach obviously, but my risk was below a higher low, meaning that to me, if I get in and then all of a sudden it turns around and stops me out at something with this kind of price action, which I'm assuming this is a good sell-off, it's getting consolidated, so someone's accumulating through here and they're going to lift it. It gets lifted and then fails, something's majorly wrong in my book. But if you bought it now, you sort of have to be, your risk is roughly in the same area. Unless you put it just below a candle, whereas if you had it at, say, 180 below this green candle, then there's absolutely no reason it can't go down, close the gap and then lift to stop you out in the meantime. So that's what I don't like about it at this stage. I want to see price give me a level where I can work from. Okay. There you go. So does it make sense? All right. So where are we at the moment? We're probably 130. So we've got through a bit. I want to see, like I said, I've got this little run up here. If we're going to hold this above the MAs, it's got to hold there, and it's going to give me something to work off. All right. So what was the other one I just want to go over before we finish there? CCL, it's going, probably could have bought that. That's a bit like just what we drew up there. That's not what I want. I'll draw it up again. So it's a bit the same as just what we discussed with that setup. You've got the market pushing down, popping up, going back down, and look, it's roughly the same level. It is ever so slightly higher low. Then you've got another little higher low. That consolidation through 880. Just 1 second. There you go. So we've got that consolidation through here off this level, which when you go back and look at the weekly also, it's a key level. Look through here. It's always been bouncing off the 5, around 5 here, back in 2016 twice. It got through there in 2017, reacted up quite hard. Retest started last year, bounced up even harder. It got smacked down here. So whether that was ready to build another high low off the MAs and trade all the way back up to 15 just before the markets got knocked down recently, who knows? But you can see that that's a key level, key major support zone, and we're starting to lift off that. Retested straight back into it with that sell-off, back in March, bounced up, started to hold up slightly, ever so slightly higher. Just in here, just above 8 or 805, thereabouts. It lifted, and we're sort of going sideways from here, and then we're going sideways from a slightly higher level at, say, 850 as well. So what I'm really looking for, I just want to see, and it's not really holding on above the MAs, it's just consolidated. So the MAs are sort of catching up. It's gone again. So what I'm ideally looking for is that breakthrough, retest, and then go and look to buy. So I want confirmation that we're going higher. Okay, and I don't really want to see that push up to 975 and then all the way back down to 875. I want to see, say, a push up of just above 9, say, and ideally have a bit of a pullback, but then buy a step in, and again, at a higher level. If I can step in on a short high level, I've got very, very small risk. Price action starting to play out for me, and we're working off a major level at 8, and we could be looking back up to 13. All right. So I think this is a good one just to work on. Obviously, you need that volume. If we start to get rally and we start to get some good volume coming in, then yeah, this one could be a goer. But just keep an eye on that. We'll see how we go. All right, so probably call it a day there, guys. Any questions? Feel free to send us an email to support@tradesetup.com.au. And just remember, if it'd be much appreciated, you jump on the website, keep an eye on the website anyway. Any suggestions also that you might have that you might want to see in the resources, or feel free to send them through. We're always up for critique, critique or suggestions, whatever you want to call it, good or bad, doesn't bother me. We're willing to have a look at it and work on it anyway, just to improve the service. But also just keep an eye on that for that subscription link that we're going to post up there, hopefully sooner rather than later. And then you can click on that. So anyone that's new that might be watching this video doesn't umming and ahhing about TradeSetup, at least subscribe to the newsletter that's going to be going out and keep an eye on that resources page to help you make your mind up. And if anyone that likes us, jump on to Twitter and YouTube and like the videos, like the stuff we got to help us spread the word. All right, guys, enjoy your day. Thanks for joining me, and we'll speak to you again soon. Cheers, bye.